Hello, my name is Thomas Massey. This video will be for individuals and small business owners wanting to understand what estimated quarterly tax payments are, how to calculate them, how to submit payment to the IRS, and what the IRS looks for when reviewing individuals and businesses' situation to ensure that they maintain compliance. I am a CPA. I have 2 degrees in accounting, and I have worked with hundreds of small business owners in various industries to help them stay compliant and have ensured timely filing of estimated quarterly tax payments. So what are estimated quarterly tax payments? Estimated quarterly tax payments are due in 4 installments. April 15th for the first quarter, June 15th for the second quarter, September 15th for the third quarter, and you are given until January 15th of the following year for the last quarter of the year. The IRS may assess penalties and interest for not paying enough or for not making a timely payment of estimated quarterly tax payments. The IRS does not want business owners to make a lump sum tax payment when they file their taxes at the end of the year, nor do they want business owners or individuals to make a lump sum tax payment at the end of the year for all the tax that is owed for their tax situation. And this is why the IRS will assess penalties and interest for not paying enough taxes, as well as not making estimated quarterly tax payments as a whole. How to calculate estimated quarterly tax payments. The first thing I talk to business owners about when making estimated quarterly tax payments are their books. In order to streamline making the payment, in order to make the most accurate payment and not have to pay more money to the IRS, or in some cases, make sure that you're paying the right amount, you have to make sure that your books are as accurate as possible. When reviewing your books, you will have to essentially understand what your year-to-date revenue is, in addition to what your year-to-date expenses are. And for a simplified method of understanding what your estimated tax is, I would take your year-to-date revenue, your year-to-date expenses, take the net to get your profit, and from there, I would multiply that by 20 or 30% on a conservative basis, but depending on what your tax bracket is, to understand what your estimated tax is. This is very conservative, and you should also review other things that are pertaining to that. For example, if you would like a more precise calculation, there may be other things that are factored into your particular tax situation, such as income fluctuation. The income of your business may differ from quarter to quarter or throughout the year. In the springtime of your business may be its peak season, so you may receive a lot of income. You may want to make a higher tax payment than the end of the year when you are essentially getting ready for the busy season. Additional credits that may be affected into your tax liability that may affect your tax situation, as well as deductions that are not included on your business tax return but may affect your personal tax return that would be included in your estimated tax calculation. I would recommend speaking to a CPA or a business tax professional in order to get the most precise or a precise calculation so that you are not paying more in an estimated tax payment than you would like to, and then again that you are paying enough for what you are required to pay based upon the IRS's standards. The taxpayer, the business owner, is responsible for paying the correct amount or paying estimated quarterly tax payments. So when you do get the calculation, do not forget that you have to make the actual payment to the IRS. We will talk about the various ways that you are able to make a payment in a second. However, I just want to remind you that the taxpayer is the one that is responsible for actually making the tax payment. The CPA, the tax professional, will guide you and assist you in actually making the correct payment and where to make it. However, the taxpayer is required to make the actual payment. Other things to think about: if this is not your first year in business and your business had a tax liability in the previous year, you are required to submit estimated taxes based upon those amounts. And the IRS may have, or your tax preparer, your CPA may have given you vouchers from the previous year telling you exactly how much estimated taxes to make quarterly. And those are based upon the minimum amounts that are required to made based upon IRS standards. If this is your first year in business, it is okay to estimate based upon the quarterly amounts. However, if you have been in business for multiple years, the IRS has different stipulations upon what estimated tax payments or the minimum amount of estimated tax payments that you are required to make. How to pay. There are multiple ways to pay. I would say the easiest way to pay is online. It is very simple. Create a tax account with the IRS through ID Me. It's very simple. All you'll need is your government issued ID. Create that account. You will be able to see your tax account and be able to make payments there. Not only will you be able to make payments, but if you go back, you'll be able to see what payments have been made, and that will be good for a different portion of this estimated tax video that I will talk about in a second. Another way that you're able to pay is by mail. I did mention the estimated quarterly tax vouchers that you have received. If you use a tax preparer or a CPA in the past, they may have given you these, but essentially it is a tax voucher that would be submitted to the IRS along with a check. The IRS does not want you to send cash through the mail, so if you are mailing in your estimated tax payments, make sure that you are submitting a check with that estimated tax voucher. The last thing that you are able to do, or the last way that you are able to make estimated quarterly tax payments, is in person at your local IRS office. After making the payment, after receiving the calculation, I would retain all documentation pertaining to your estimated taxes that have been paid throughout the year. These are pivotal in understanding that when you do file your taxes, it's going to factor into the amount of money that you would receive in a refund or the amount that you would owe, and then also the penalties and interest if there were any assessed on behalf of the IRS. It is good to have this documentation handy so that if there are any stipulations or any things that come up in the future, that you have the documentation to show that this payment was made here, I paid this amount, so that if it does not match the IRS's records, they're able to help reconcile instead of you receiving a tax bill and just paying the bill because the IRS has sent it to you. This is very similar for states. Some states require estimated quarterly taxes as well. The process is very similar. However, each state may have its own rules in regards to estimated quarterly tax payments. If you have any questions or want personalized advice, book a call with me or speak to your CPA or tax professional in order to assist you with state-specific help in regards to estimated quarterly tax payments. Like, comment, and subscribe for more CPA, tax, and accounting advice for small business owners. Sign up to my email to receive updates, news, and reminders in regards to your business or individual financial situation. If you would like to receive personalized advice, please book a call in the link below. Have a nice day.